All right, traders, we're looking at a British pound daily chart, and we want to walk through a scenario here. And just want to bring your attention to this. We've had this significant uptrend, and then we've had this failure at 190. We've had a triple top failure at 190, and then prices drifted lower. Then we've had a second attempt up here, and more or less remaining in this consolidation of about 200 plus a few pips consolidation. We've broken out to the south, and price has come back up, and it's been testing these lows here. Very, very distinct and very profound lows at 85.50 range. And what I want to do is I want to bring you down to have a look at some of the lower time frames of what's happening, because this is very bearish at the moment, and we see we've had two attempts at the 85.50 level, and here we're at the base of the 50-day moving average. Here we're just testing the 50-day moving average. Down here we've got our average true range, and we see that during the trend the ranges were quite large at the time. They were actually almost as much as 200 pips up here, but the ranges have since declined. The daily range has declined to down around 120 to 130 pips on a daily basis. As you can see here, these daily candlesticks are quite small, so the daily ranges have constricted for the time being. Let's go down to a 4-hour chart and have a look. Here we have a closer look of that level of support that provided support to the market here and is providing resistance here, and we can see how price is struggling to move through this level of resistance, and almost tweezer-like looking. And we have our 10-day moving average also providing some resistance. At the bottom here we have our MACD, and we've had this divergence and a leg up, and now we have a whole new scenario because price is now battling to get through this level of resistance. Let's scroll down now to our let's just have a look at our 2-hour chart, and I'm being a bit excessive here, taking you through every time frame, but I just want to do this just to make a point. Here's our level of support, which is becoming resistance, and I just want to show you what that looks like on a compressed version. Compressed, lows, lows becomes resistance. Again, I don't need to sound like a clanging cymbal or a off-tuned trumpet, but resistance, support becomes resistance, and these are very, very tradable levels, folks. Let's go to our 1-hour chart. Here is our 1-hour chart, and let's have a closer look at what is going on a kind of a more microscopic level here. And let's just change the color of this guy so that we can see exactly what's happening. Here's our level of support becoming resistance, and we're watching price struggle to get through this level of resistance. Let's have a closer look at that now. Here it is, but let's look at this even closer. You see this high right here? This is the previous days or the previous trading sessions high, and price is really struggling to get through there. You see this nice hammer, and price continues to struggle to get through the high. Now what we're going to do is we're going to walk through and see what is happening and what sort of formations are coming to fruition here. Let's just kind of have a generally map out what is happening. And here we have a trend line, and let's just draw another trend line over here on these lows right here. So we have kind of a short-term trend line and somewhat of a medium-term trend line, and let's just watch price move from this point. Price is currently holding above this level. That resistance is now offering support to the market, and we need to see price move through that level. Prices come down through that level. And what this is doing here, folks, is the reason why I'm saying that we're looking for price to move through this level is because this is a significant level of resistance, and it's overriding any of the short-term technical factors that are occurring down here. And that's why we want to see this thing start to move below and through these levels. So we see it move through support and through support here, and now we're seeing it move through the trend line. The move through the trend line is our first step to see a potential head and shoulders formation, and we'd like to see it come through down to one of these levels of support here. And let's watch to see what price does. This is a very tradable move in and of itself. Price is consolidating now. It spikes all the way back up, hits this level of support, this resistance. We've come down and hit the trend line now, and we've also hit this level of pretty much this level of support down here. And let's just draw it out. It's never going to be clean, folks. Never going to be perfectly the perfectly clean scenario that you're looking for. But this is real nice. This is a nice level of resistance, becomes support, and support again. Now what are you looking for? Price is broken through the trend line. It's met its level of support. Yes. What do you want to do now? What do you see here coming to fruition potentially? What you should see is you should see a potential head and shoulders. Now where do you want to enter the head and shoulders formation? Where would be a good place to enter the formation? Well, one place would be to simply draw our Fibonacci's from the high down to the low of this swing, and we're looking for areas of convergence. Now we see here that the 62% retracement is currently converging with the backside of this trend line and this level of approximately kind of pseudo approximate level of support and resistance in this area. Now we're looking at about 85.25 area as a potential bounce or potential entry for this head and shoulders formation. Price could bounce at the 38% and continue. You never know. It could be a very fast trend, a very decisive move downwards. But we're looking at or about the 62% retracement, or maybe even the 79% retracement up here. And now let's watch price move up from this point. We're coming up to, which is also the 10-day moving average, 62% retracement on the backside of the trend line. Price is currently consolidating at these levels, and one of the reasons it's consolidating is we are now drifting between sessions, waiting for liquidity to start to pick up. As liquidity picks up, we see that price has come and tested this 62% retracement, approximately the backside of the trend line. And we want to see, maybe you can take the chance of getting into the trade now, or you can wait to see what happens as liquidity begins to pick up in the new sessions, because we could come back here up here and test it again, or price could continue down. We don't know, right? Ideally, you want to trade as close to the 62% retracement as possible, because that way if you put your stop above the 79% retracement, you got a tighter stop, and it would be about a 25 pip stop to move it above this level. This is really nice now, because we've waited, and this is nice because it is kind of forming. It's a really nice hammer, and this hammer is strongly suggestive of a down a strong potential down move from this point. If you want, you can wait even further, and you can wait for confirmation. You can even, if you want, you can even draw a trend line up here on this parabolic level. As we continue to see price move forward, we now see a tweezer top formation or two hammers, and I would think that during this time period, because each of these candles represents 1 hour, let's just make this a little bit bigger so we can see what's happening. On these Fibonacci trader charts, tell them Chris Laurie sent you. A nice tweezer top here at the 62% retracement backside of the trend line, 10-day moving average. I think a short here is potentially in order. Who wants to go short? So if you enter 10 lots short here, you want to make sure that you take some profit on maybe at least 60 to 80% even before it gets below this low right here, because we don't know if it will continue. But if it does continue, you'll still have 20, 30, or 40% of your position left in case price decides to keep moving downwards towards these extension levels, these price projection extension levels. Let's move forward now, 1 more hour. And price makes a decisive move within the hour, and it could have paid you within 60 minutes in that move, and very, very nice move. Now look what price did. Look what it did. You see this level of support here, which we had defined earlier based on previous price action. That just doesn't stop there. It goes further back. The market is respecting that level of support. Right, and we get just a cute little bounce at this level of support, and price continues downward from this point. And the reason I am showing you this right now is because I've just participated in this, and this is live right now. And so the trade is done now. For the most part, there's still a little bit of position remaining in the market, but I anticipate that price could come all the way back up to 84.60 area, 60 to 65 area, before continuing its downtrend, perhaps later in this session or in the next couple of days to come. Let's have a look and see what this looks like on the 15-minute chart. Let's just walk through this scenario. Here's the down move that we spoke of. Here's a clearer definition of our support and resistance levels, right? At our 62% retracement approximately. There's also a support resistance down here at the 50. This choppy price action is a result of the close of Friday trading, right? So it can be disregarded to some degree because it's close of Friday. As we watch price retrace to the 62% retracement, and we see it on a micro level. Look at during this 15-minute time period, the spike up, consolidation, flows moving within this range, moving nicely within this range, forming this range is currently between 85.30 and 85 roughly 12. So this is about a 20 pip range that the current banks are dealing within, and if we see a break to the downside, then the move could become significant. And we all know what happens. There's a breakout to the downside and a real nice steady move, and look at the bounce at the low. You got to watch your support levels. Right? Look at the bounce at the low. Let's just see how much of a bounce it was. The low 67 to the close 74, so it was only really a visibly 7-pip bounce, but in all likelihood it bounced more. We'd have to look on a 5-minute chart to see exactly how much it bounced. And then a continuation down to the 127% extension, and price stops at the 127% extension. Price currently consolidating, didn't quite achieve its 162% extension, but price currently consolidating down at 84.20. And as you know, on the British pound, 20 and 80 are natural support resistance levels, as well as the figure. And currently we are right here, right now, and I'm expecting, not expecting, but I'm anticipating the possibility of price to retrace back up to this level at 84.65.